Okay, boys and girls, we're going to be talking prop today. Roll the intro. Let's have a chat.
Matron, take them away.
And a warm welcome to one and all. If this is your first time here, I'm the big fella Scruff, and what I'm trying to do is put trading in the real world. Maybe show you a trick or two along the way. And that's exactly what I'm going to be doing today. So hit the subscribe button, turn the bell icons on, all that sort of stuff, and we'll bash on. So why prop? And what is Coffee with Scruff? Well, first of all, Coffee with Scruff is exactly what it says it is. It's me, Scruff, with a cup of coffee, because we all know Scruffy likes a coffee. And I'm going to have one right now because my throat's dry. And then prop. Well, if you follow the channel, you'll see I talk about prop quite a bit. That's because I trade a prop account. And I have done for the last couple of years. And I've done quite well from it. And has it set the world on fire? No, because I believe in slow, steady growth. Now, that's the key element. But if you ask me if I like the industry, I will say no. I don't like the industry. I think it's fucking terrible. But for one reason. It promotes gambling. Heavy gambling. Now, if you are interested in prop and you do it correctly, it's a wonderful vehicle to increase your own funds or increase your own wealth, with the caveat of do it properly. Now, I'm going to jump on the whiteboard and I'll show you how to pass one of these challenges. Now, when I look at the industry, now for me, the journey started around 2 years ago. I did it for the guys in the group that I moderate. They wanted to try it. I didn't. But they said they really want to try it. So I did due diligence and had a look around the different companies. And I didn't like any of them, bar one, which was one of the guys' preferred choice as well. So it's a little salute to Volga, because that's who got me into this. And it's the 5%ers. And even to this day, the 5ers are the only company I will put my name to when it comes to the prop industry. The only company. I get offers every day, and I always turn them down. And I turn them down for two reasons. One, I don't know them. And two, I earn my wage from trades. It's that simple. So I can't be bought. If you see me talk about companies, I deal with them personally. Now, for me, there are three types of accounts. You have the prop industry we are discussing. You have your own account. And then you have one in the middle, which are investment accounts. Now, for me, if you want to know how I trade, I have two live accounts. I trade with IG as primary. And I have done for over 15 years, so I'm not going to change it. It's where most of my money is. I trade with BlackBull because they have leverage. And you'll see that we're building up accounts in there with the squad. And BlackBull's good because it uses the MT5 platform, which IG doesn't, but I like IG's platform. And it's worldwide, so that's pretty good. I trade Darwin X, which is an investment house. So it's slow, steady growth. You do trade it like a normal traditional Forex account or anything, but it's based on investment. And I trade a Vanguard account. That's it. So it's prop, investment, and live. They're the three. And of them, 5ers is my prop, Darwin X and Vanguard are my investment, and BlackBull and IG are my live accounts. And I treat it as a job. Keeps me going, keeps me sane. So, where am I going with this? Prop is blown up probably for the wrong reasons at the moment. And I can certainly see that from the comments on the videos. There's a lot of people that are really misinformed, and you can blame Twitter for that. A lot of them are just talking out their arse. They haven't got a fecking clue what they're talking about. And they're kicking off left, right and centre because the regulators have shone a light on the industry in the US, and the ripple effect of that could go global because those regulators are having a pop at MetaQuotes, and MetaQuotes deals with a lot of these prop industries. How do you kill a lot of people at one go? You go to source, and that's how they do it. So instead of going from individual company to company to company, all these companies use a single platform. Regulator goes to the platform, says, sort that out or we'll sort you out. And that saves a lot of legwork. Simple. The next way of doing it is you look at the payment providers and they do the same thing. So why? Why has all this come to pass? It's down to the marketing of the industry. Now, the industry markets that you're going to be a millionaire, put like a couple of £100 into an account, they'll give you this huge account to trade with, and you have a profit split, blah, 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 and away you go. Sadly, that's not quite the case. And when I go on to the whiteboard in just a second, that'll become apparent. So why the 5ers? Why do I look after them? Well, one word: trust. Trust is a big thing in this industry. I've never not been paid, not once. So every month I put my ticket in and every month they pay me, and I take that money and I put it in the Vanguard. And it's that simple. Then I trade the Vanguard and away we go. So trust is the big thing for me. The next thing is they have choice, and let me show you. If I flick this over, you have not only choice of products, trade Forex, you can trade your metals, indices, commodities, and crypto. So it doesn't matter what you do, there's a market there for you. Platform is MT5. Some people like it, some people don't. Personally, I've got my head around it and I quite like it. You know, I find it quite intuitive. I can do things with it. There's certain parts of it I don't like. You know, I would like to zoom in on a chart and move the chart around the screen a bit, but you just kind of get used to it. But as a platform, works very well. So I'm happy with that. Then you have the other choice of account. You can go 1, 2, or 3 steps. Hypergrowth is 1 step, which is what we're going to concentrate on. High stakes is 2 steps, so you go through 2 stages, then you get funded. And then boot camp, you go through 3 stages and you get funded. Hop, skip, and jump. 1, 2, 3. So if we look at this before we go on the whiteboard, we'll see the hypergrowth, if you know what you're doing, is the way forward. You just do a milestone, you get funded, and away you go. Now, a while ago, they used to have time limits on these things. You used to have to do a certain percentage within a certain period of time. It was around 6 months. Now, what was set the 5ers ahead of all the other prop firms like FTMO and everything was they always had the highest time limit. And the time is the important factor. If you're trying to do 10% in a month, you're an idiot. It's really hard and it's not sustainable. It is not sustainable over a long period of time. Because if there was, every Wall Street banker would be a billionaire and the whole infrastructure of economy will be on a constant run up. There would never be any recessions or anything because money will be growing all the time in a perfect world. But it's not. You know, there are drawdowns, there are recessions, there are people getting the markets wrong all the time. So if you're aiming for 20% a year, 20, 30% a year, you're doing well. So really to do it in a month, you're pushing the boat out a little bit. But it's 10% on a balance that is really just buying power. And that's what we're going to get to. So this is what you would have at the moment. So this is in dollars. So depending on where you are in the world, the price might fluctuate. But it's kind of, you buy in for 260, which is peanuts, really. 450 for a 10,000 account, which is what we're going to be basing on. And you're looking at 850 for a 20,000 account. Okay. But what does all of this mean? Well, it just means that they'll give you a live account to trade straight away. You do 10% of that target. So in this case, you have to do an evaluation target of 10% on 10,000. You need to generate $1,000. Okay. You have a stop out level or a drawdown level of 6%. That is based on the 10,000. So what you'll be looking at there is a 600 drawdown. So as long as that account does not go below 9,400, that'll stay. They have a daily pause. Now, this is something that was introduced to try and help you. Jury's still out whether people like it or they don't. But what it means is if you go into a drawdown for 3% in a single day, it will close out your positions and stop the trades to save the account. So if you haven't put a stop loss in, or your stop is slightly wide, or your position's too big, etc., that 3% will package out and close the account down. Okay, and then tomorrow it'll give you a breather. Next trading session you'll be allowed to trade again, and away you go. Leverage 1 to 30. It's in line with ESMA and everything. Nothing there to worry about. And that's it. And then your profit split. It depends on where you are in the scale. And now if we click onto that, it'll come down. So these are your first evaluations. So if you're looking at that, which is middle of the road, you've got to hit 1,000. They'll do a payout of 50% of it. They'll also give you a bonus, which will go into your desk point. So if you do close the account out, or you want to take another challenge, you can use that bonus against it. So you're accruing money for another challenge. And then as you go up the scale, your profit split gets greater. All right. So the principle is very simple. You just pay your money, they give you an account, and away you go. That mean you say you can pass one? No, not even feckin' close. Because I'm about to show you how to pass one of these things sensibly and not be a gambler. Now, if you can do it sensibly, the industry is wonderful. If you go in it as a gambler, you're a fucking moron and you'll never pass. Or you might get through it, but you won't continue to grow it. Let's go on the whiteboard and discuss. Bum, 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 bum. Okay, so we're coming on the whiteboard and we're going to cut through the noise of passing a Forex fund. And what have you got to say about it, big fella?
Together, we can rule the galaxy.
We can rule the galaxy. We definitely can. And he'll probably not shut up. But it's me good toy. I like me toy. Got another one over there. Little salute to the boy wonder.
Don't know the power of the dark side.
And you don't, boy wonder. How time was that? Sent me a lovely stormtrooper. Hope you're doing well, Jan. Keep it well. Anyway, getting back to prop. I still trade prop. I have done for a long time. No, it won't destroy me. It actually keeps me focused. And that's what this is all about. Do you have them toys that just keep on going? I remember when my kids had Furbies. I murdered the little bastard.
Jesus Christ, dude.
Fucking middle of the night kept on chirping on. Anyway. Count, pass, time, stop. What relevance do they have? They have quite a bit. Because they tell you a story. But they also tell you the wrong story. And this is why you fail. So if we look at this, we were looking at the £10,000 account. So you would assume, oh, you've got 10,000, right? That's the account. What's the pass point? Well, the pass point is 10%. Okay. Which equals 1,000. With me so far? That's about as simple as it gets. Now we've got time. Well, time is now 0. But time is an important factor. For all it's 0 on the board, because they've taken away the time limits, there are still time profiles in it. You can't let the trade be dormant for between 14 and 21 days on certain accounts. You can put a pause in, but you've got to be well aware that that sort of inactivity is there. So if you go on holiday for a fortnight, you mightn't trade the week before, you mightn't trade the week after. So you've got to be a bit careful about that. So you've got to be aware of your time. But your time does bring you things, and I'll jump onto that in just a second. And then you've got your stop point. Now what's the stop point? Now on this particular account, the drawdown limit is 600. 600. So what does that mean? Well, that gives you a waterline that the account cannot go below. And that waterline is 9,400. So as long as the account has that much in it, it's safe. But this is where lies the problem. You would think you have a £10,000 account. You do not. You have a 600 account. Why is that? You lose the 600, you lose the account. So if you're sizing to this, which theory could be a lot, you are going to blow the account because it will go through that in a heartbeat. Then there's another problem. That claims to be 10% of the account, £1,000. It is not 10% of the account. It is 100% plus, because you've got to double the drawdown to get into a winning situation. And this is what I mean by blown accounts. If you don't look at this correctly, there'll be an issue. Now, if I look on the other side of the board, and I'm going to sort of put some extra bits in for you. So you have, number one, your account. Okay? You have your size. Then you have a stop. Then you have your target. Target. And then you have your plan or your strategy, whatever you want to call it. Okay. So you've now got another 5 pieces of information to consider. Out of this set, you know you're working to 600. But what's important on this side? Do you think your account is important? Do you think the size of position is important? The stop you place into the market, your risk rewards, that sort of thing. The target or the plan. Now, I'm going to pause just a second, have a bit chat with the big man. Join me. And we're purposely going to pause because I want you now to drop in the comments which one of them is the most important. And what do you say? Oh, I haven't switched it on.
Look, sir, droids.
Droids.
Together we can rule the galaxy.
Right, have you done that? Good guys, good stuff. Now, a lot of people will start looking at this because everybody goes on money management, risk profile, all of this makes the account. Yes, but it's actually tied to that. So that's not really important because it should be part and parcel of what you're doing in the first place. Now, the plan you can knock off straight away, because if you haven't got a plan, haven't got a strategy, what on earth are you doing trading pop in the first place?
They've done studies, 60% of the time, it works every time.
That doesn't make sense.
You shouldn't be trading at all. You should be paper trading, learning the craft and earning the right to trade. Now, the way to earn a right to trade is through a 30-day challenge. 30-day challenge, one asset, one trade, 30 days. That's it. And at the end of it, you should be positive or minus. Now, you also use your minimum position size, so you can't tinker with it. If you've done 30 trades, max, and you're positive, you pass. If you do 32 trades and positive, you fail because you took an extra trade. That's overtrading. It's undisciplined. It's no good. Do the challenge. So you should know what your plan is. All right, so we're going to discount that. We're going to discount the stop and the target. Why? Because it should be part of your plan. I trade 1 to 3. I trade 1 to 1. I do this. It's part and parcel of what you do. You should know this before you go into market. Is it the account that is the most important? Well, not really, because if you look on this side, you've figured out that that is not important. That is. The drawdown is important. So what we're left with is size. You want to pass a fund. You want to survive in trading full stop. The most important thing that you will do is size correctly. The size will control the account. The stop and the target doesn't matter. The size just gives you the money payment for following the stop and target. All part and parcel. So let me get rid of this a second. And we're going to break this down. So we know that you got 600. That is now the account. Our target is 1,000. We don't have a time limit. So time is 0, but we're going to need one. And we're now going to work out size based on this. Right. Well, there's a very easy way to work your size out. There's a ready reckoner that you can use. And that ready reckoner is this. For every 1,000, you're allowed a position of £1. £1 for every 1,000. Or to put that into 100 terms, if you have $100, pounds, it would be 0.01 as a lot, or 10 pence. Right? Simple maths. So, if I have that equation, I can work the position size out. That equals 0.06 or 60 pence. That's my biggest position size I can trade with that account. Maximum. Right. So where do we go from here? Well, I need to work out how I'm going to get £1,000. How do I know that? It's where time comes in. Time equals focus. So you need to focus to what you need to do. Now I need a calculator for this one. So I would suggest, rather than sort of go gun-ho and try and burst the account in a month or a few weeks, you give yourself 3 months to do 1,000. 3 months. So March, April, May, because we're coming into March tomorrow, there is approximately 62 working days. Right? That's based on Monday to Friday. We're not working weekends. We don't do crypto. Okay? So what you need to do is take £1,000 and divide it by 62. That gives you 1612. Okay, so we're going to get rid of this a second. Okay, so we're looking at 1,000 divided by 62 equals 1612. So what we're going to do is we're just going to round it up to 17. You need to make £17 per day.
You're taller than I imagined.
I'm bigger in every department.
Is divide 17 by your average winning trade. Okay, let me work that out for you. So what's your average winning trade? Well, do 10 pips. Maybe it's 15, but bare minimum's 10. Okay. So trade 10 pips. That equals £6. Okay. What's happening now? Now we're defining what we have to do. 10 pips will equal 6 quid. Well, that's, well, you might as well say 3 because it's 18. So you need to trade 3 times a day at 10 pips. So what can you deduce from this? Can you trade 3 times at 10 pips? You might only be able to trade twice. So you either up your time limit. So you might give yourself 4 months to do this. So you add on a little bit extra. So your target stays in line. Or you look for trades that give you 15 pips. So what's 15 pips? Well, 15 times 60 is 9. So that will be 9 quid. Trade 15 pips equals 9. Do that twice and you're passing 3 months. You can't do that, increase your time. So where have I gone with all of this? Why have I been talking like this? It's all about your planning, guys. If you don't plan out how you're going to pass it, how on earth can you pass it? Your strategy is not what will do the job for you. It really won't. And all I ever hear all the time, what's your strategy? How do you get in? How do you get out? Nearly every single one of them is going to fail. Every one of them. Because they don't apply the back end business management. If you've got no business management to your trading, you don't know where you're going, how you're getting there, what it entails, what the limits are, you're finished. You're finished before you even start. And that's why the industry has such a high failure rate. When I go to market, and the guys will be testament to this in the squad, because they see me do it time and time, I work everything out before I press the button. I couldn't care less about the strategy. I really couldn't. Roadmap the chart. I know what zone I'm working in. Check the ATR. I know what the target will give me. Check the direction. I know where it's going. All these things are done prior to pressing the button. And then the last part before I do press the button, know what the target is, know where I'm getting out, know what the stress point is, and I'm at peace with the market. And because I'm at peace with the market, I trade as calm as a cucumber. That's it. That's how you pass a fund. And it's how you maintain your personal accounts. Simple as that. So I hope that helps. I'm always around. And if you're stuck, just drop in the comments. I always answer them. And as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.